Hi all, welcome to my YouTube channel. So today we will be discussing about the topic called payment fundamentals. So I'm very sure that whenever you have sent money, you must have wondered what actually happens behind the scenes. So you click send, your account gets debited, and then suddenly the beneficiary says, "I haven't received it yet." So now the big question is, where is the money? Is it lost? Is it traveling? Is it sleeping in the bank server? So today in this video, we will decode this mystery in a simple language. In this video, we will understand what a payment really is, who participates in a payment, what instruction, what is the clearing, what is settlement, and posting mean, and why these concepts are extremely important for you as a business analyst, as a tester, as an operations user, and anyone trying to enter the payments domain. So with that, I welcome you to my channel and hope this video would bring value to your skill. By the end of this by the end of this session, you should be able to explain the payment flow confidently in an interview, in a requirement workshop, or even to a non-technical audience. Okay, this slide is our roadmap for the next few minutes. So we will move step by step. First, we will understand the foundation, so what a payment really is. Then we will classify the payments using different lenses, such as credit transfer, direct debit, domestic, cross border, retail, corporate, high value, low value. Then we will understand the mechanism behind each payment flow, like what is the instruction, validation, clearing, settlement, posting, reporting, and etc handling. Then we will connect to the real flows, like domestic transfer, cross border wire, direct debit, and salary batching. Finally, we will see why payment messages matter, and how a business analyst or SME or subject matter expert should think in a real project. In a real banking project, this roadmap, in a real banking project, this roadmap is very important, and it becomes very practical as well. You may be asked, what type of payment is this, which rail will process it, what message format is used, what happens if it fails, and which system post the account. With that, let's look at the very basic thing on the definition. What is a payment? So a payment is much more than just clicking a send button or sending money. So at the simplest level, a payment is the transfer of monetary value. It's a transfer of monetary value from one party to another to settle an obligation. In simple words, if someone owes something, the payment closes that obligation. Um, you buy goods, you pay the merchant, company pays salary, employee receives money, company pays taxes, government receives value, business pays supplier, supplier's invoice is settled. So payment, in the sense, you can say payment is actually means the settlement of obligation. So this is how you can just quickly remember what's a payment. It's a settlement of obligation between two party. Now here is the banking reality. So in most modern payments, physical money does not move like a parcel. So banks usually update the accounting entries in case of payment flow. So one account gets debited, another account gets credited, and the obligations are adjusted. Okay. Now many beginners get confused here. So in international payment, cash is not packed in a suitcase and sent from India to US, say for example. So what travels is actually the structured information. Structured information is a message telling banks what amount to debit, what amount to credit, who is the sender, who is the beneficiary, and how settlement should happen. So think of it like a big movie ticket booking. The seat is not physically moved to your house. The system updates ownership and confirms your right to that seat. So payment works through the instructions. Payment also works through the instructions, records, and the obligations. Now every payment has characters. It's just like you know it's just like a story. We call them as a parties. So on one side we have the pair, also called the debtor, originator, remitter, or ordering customer. This is the party sending or initiating the payment. You can call them as sender. On the other side we have the payee. They are also called as a creditor, beneficiary, or receiver. This is the party who finally receive the money. So they are the receiver. Then we have the pair bank. This bank debits the pair's account, and we have the beneficiary bank, which credits the receivers or the pays account. So in a simple domestic payment structure, this is very straightforward. So for example, Ravi tells his bank to pay Amit. Ravi's bank sends through a domestic rail, and Amit's bank receives it, and Amit's account is credited. But in cross-border payment view, we may need an intermediary or correspondent banks. Why? Because not every bank has a direct relationship with every bank in every country and every currency. So think of correspondence like a connecting flight. So this is where this correspondent bank come to the picture. Think of this correspondent like a connecting flights. So if there is no direct flight from your city to the destination, you travel through a hub airport. So similarly, payments may pass through intermediary banks on in the case of cross-border or international payment. Okay, now this is one of the most important topic in the entire payment fundamental session. So please remember this golden rule, where message sent does not mean cleared, cleared payment does not mean settled, and settled does not mean posted to the customer immediately. Now let's break this down. So what instruction means? Instruction means um, somebody says move X amount from account A to account B. That will go to validation. In validation, basically means the bank checks whether the account is valid, balance is sufficient, limits are okay, fraud rules are satisfied, and compliance checks are passed. Clearing means exchanging, routing, validation, and sometimes netting of obligations between banks. Settlement means final interbank value movement. This is where obligation between banks are actually discharged. Posting means customer or ledger account are updated. This is when the account balance reflects the debit or credit. So now many people casually say swift payment happened, but as an SME, your statement actually matter. You should be saying that the instruction was sent over swift settlement, and customer posting happened through separate systems and accounts. So this is the professional language that a payment BA or payment SME should be using. So in a real banking project, this distinction is extremely important. When a customer says my money is debited, but beneficiary has not received it, we need to identify whether the issue is with the message, whether the issue is with the clearing, whether the issue is with the settlement, or is it somewhere in the posting stage. Now let's classify the payments, because not all payments travel in the same way. So a payments can be classified on the basis of various categories. So on the basis of direction, we have the payment type called credit transfer and direct debit. So credit transfer means push, and direct debit means pull. For For example, in case of credit transfer, the payer initiates and pushes money to the beneficiary. um, you transfer money to a friend is a case of credit transfer, and in case of direct debit, the pay initiates collection from the payer's account based on the mandate. For example, your Netflix subscription, your electricity bill auto debit. So that's a case of credit transfer and um direct debit. Second category could be based on geography. Domestic payment stays. Domestic payment. One is called domestic payment, and the other one is called cross-border payment. So domestic payment basically stays within one country or scheme. Cross-border involves different countries, different currencies, banks, and regulations. Third category on which the payment type is classified is the value and the urgency. So high value RTGS is a urgent and final payment. Low value is often batched and instant, rails are almost near real time. Fourth category is the customer segment. Uh, Retail payments are high volume and customer driven payments. Customer corporate payments are often involve approvals, fees, files, remittance, information, and treasury needs. So, in a real banking project, taxonomy is not the theory; it decides the validation rules, routing, cutoff, message format, fees, risk, and test cases. Let's now zoom into one of the biggest differences between domestic and the cross-border payments. So, domestic payments are usually simpler. Cross-border payments bring the drama into the scene. A domestic payment usually stays within the same country, and it usually exchanges the same currency. For example, a customer in India paying a supplier in Indian rupee. The payment follows one local scheme and one regulatory environment. In case of cross-border payment, it involves different countries, different currencies, and multiple banks. For example, an Indian the importer paying a US supplier in US dollar. So domestic payment is basically the local payment, and this is cross-border payment is basically the international plus complex payment. Now, here's the important part. So, cross-border complexity comes from many layers. So, it could come through jurisdictions, correspondent relationships, foreign exchange conversions, sanctions, cutoffs, the time zones, the fees involved, the data quality, and the investigation. In short, um, the complexity can be um, demonstrated as the combination of this routing, compliance, currency, market practice, exception management. Okay. Now, in payment projects, cross-border payments, require strong controls because error, delay, and compliance risk are much higher because of this layers involved in a cross-border payment. Coming to the payment rails, so by rails we basically mean the path, the road. So so similarly, in case of payment rails are basically the roads or network which payments travel. So different rails are used to solve different business needs. For example, we have high value RTGS is a rail, low value bets payment is a rail, instant payment is a rail, international cross border payment is a rail, card network is also one rail, and then we have many other alternatives like we have wallets, we have the blockchain, crypto, we have the fintech rails. So these are the part of these are the route through which payment flow. So high value RTGS rails mostly are the Fedwire, CHAPS, Target 2, BOSNet. These are used for urgent, large value and final settlement payments. Low value or batch systems like automated clearinghouse, bags, SEPA, credit, transfer, direct debit, NEFT in India are commonly used for bulk retail or corporate payments. Instant rails, for example, UPI in India, RTP in US, faster payments in UK provide quick availability, often 24/7. International payments often use SWIFT network, correspondent banking relationship, and in some cases CLS for foreign exchange settlement. Card networks like Visa, Mastercard, RuPay, Amex are also used for point of sale and e-commerce payment. So think of it like roads. For heavy truck, you need a highway. For a bicycle, a small lane is enough. For emergency travel, you may need an expressway. Similarly, payment rail selection depends on the amount. Payment rail selection depends on the amount, um, your urgency, geography, cost, finality, and risk involved. So, in a real projects, rail choice affects your message format, your settlement model, customer experience, operational risk, and exception handling. So, before we go further, let's quickly decode the key terminology you will hear again and again. Um, this is your payment vocabulary sheet. You will see the debtor, payer, originator, and remitter usually refer to the party sending or initiating the payment. Creditor, payee, beneficiary refer to the party receiving the funds. So these are actually the same person with different names. Instructing bank means the bank sending the instruction. Instructed bank means the bank receiving the instruction. Then come nostro account. Nostro account is an important term in correspondent banking. In simple word, it means your account held with you. For example, an Indian bank, SBI, may hold a USD account with US bank, Bank of America. So SBI will refer to that account as a nostro account with USA. Then comes the value debt. Value debt means the debt from which funds become um, economically effective for interest or availability. Then comes the cutoff. Cutoff is the latest time for same day processing. Um if the payment misses the cutoff, it may move to the next business day. STP means straight through processing. That means the payment flows automatically without any manual repair. In interview, these terms may sound you may these terms help you sound like someone who understands real payment operations and not just textbook definitions. Okay, now coming to the um, life cycle. So this is the master life cycle every payment BA should be able to map. So a payment actually starts from the initiation phase. This may happen from, I mean, the payment may be initiated from the mobile banking app, internet banking app, branch, corporate file, API or ERP system. Then it comes to the validation. This is where the account is validated. The amount limit is checked. The permission is checked, and check whether the mandatory details are present or not. Then comes then comes the then comes the stage where a bank checks the balance, limits, or the mandate. For direct debit, mandate is very important. So mandate is basically the pool based payment. Then comes the compliance and fraud check. This may include to check to do the sanction screening, AML monitoring, and the fraud rules. After that, the system will decide the routing on payment. That is where this payment should go and how it should travel, which rail it should be using. which scheme should it go, which correspondent, which and which format. After this routing is done, then comes the message creation stage, where the message is created based upon where it is being sent to. Is it being sent on a local scheme format, or is it being sent in a Swift MT format, ISO MX format, API payload, or any file. Then the payment goes for clearing once the message is created. So in clearing steps, banks exchange the validation, routing and calculate the obligation. Some systems settle gross, and some settle through net. The next one comes as a settlement. So here central bank or correspondent accounts come to the picture, because the accounts are debited and credited in this particular settlement stage, and this is where final interbank value movement takes place. After settlement, the beneficiary bank posts the money to the customer and sends the status or notification to the customer. But the journey does not always end here, because once this notification or posting is completed, there are other stages as well, like reporting, reconciliation, exception handling, investigations, etc. So many beginners, only see the debit, only see the debit and credit, but bank manages the full hidden journey behind the scenes. So just for your memory, you can just maybe keep it this particular model as your reference to speak whenever you are asked about the end-to-end payment flow. It starts from customer, then goes to channel, then goes to payment engine, then goes to network rail, then goes to beneficiary bank, then goes to the account posting. Account posting means the beneficiary customer gets the uh, amount in his or her account. Okay, so one payment can touch many platforms, and this is why payment projects are very complex. So as you have seen the payment life cycle, you must be very much curious about, like, does it happen in a single system, or does it involve multiple systems? So basically in the payment journey, multiple systems are basically involved. So the first involved, before to initiate or to instruct the channel comes to the picture. Channels, we have already talked about. It could be a mobile banking app, it could be internet banking app, it could be a corporate portal, or a API as well. Then the stage where the validation, enrichment, checking, balance check, and all things are done is done in the payment hub. So you can see there's the validation, enrichment, routing, formatting, and managing the queue. So this is the payment hub is one kind of system. For sanctions, ML monitoring, and all, compliance system comes to the picture. For to connect the bank to the external networks, the network interface comes to the picture. In case of Swift format of Swift message, the Swift products like Swift Alliance, or in case of other message format, local network adapters may also come to the picture. Then to manage the customer accounts and postings, core banking comes to the picture. Um, then the Nostro and settlement systems manage the interbank positions, liquidity, and settlement balances. There are also systems to identify the breaks, the accounting mismatch, and the reporting issues. This and those systems are called the reconciliation system. Then we have a system which notifies the customer, um, prepares the statements, and also update the payment status to the customer. So now here's the important part actually. If a payment fails, the problem can be anywhere. So it could be in the channel, it could be in the payment hub, it could be in the compliance state, or it could be in the network interface system. It could be anywhere in any of these eight systems. So in interviews, don't just memorize the systems. I mean, these are some names which come which actually are used in the payment. process flow, and each system plays its own role in a payment lifecycle. For example, Global Pay Plus. This is a payment. This is a payment hub. Payment hub are also called as the brain of the payment chain because it does the majority of the work. Then your TLM. TLM is used for reconciliation. Swift Alliance is your network interface. Okay. Uh, then your Actimize is used for your compliance screening. Flex Cube is used for your core banking. So similar kind of products are available in the market, and most of the banks. So these are some products which actually have the higher market share in those areas. Um, so this slide explains how business intent becomes structured data and where things can fail. So when a customer says pay this person, the bank cannot just send that as a casual sentence. It must convert the business intention to a structured data. That is structured data, maybe a domestic layout, maybe a bank API payload, corporate file, a Swift empty format or MX format. So in simple words, payment methods are like standard forms. If the form is incomplete or wrong, the payment may fail, or it may go to repair state, or it may get rejected or delayed. Common issues include, insufficient balance, invalid beneficiary account, wrong bank identifier code, your cutoff is missed, compliance hold, duplicate instructions. So these are the reasons because of which the payment may get failed. Then we have some common misunderstandings regarding payments. So your clearing and settlement are not the same thing. So clearing is not settlement. Same day payment is not actually mean instant payment. Swift messaging is not does not involve money movement, and value date may differ from your processing date and settlement date. So these are some misunderstandings that we should be very careful about. Now let me explain with a quick example. So, say customer says amount debited but beneficiary not credited. So in a operational language, this may mean payment is in transit, or in repair, or in queue, or under sanction review, incorrectly routed, acknowledged but not posted, or awaiting settlement. So this translation skill is very important for the payment BS and the SMEs. Okay, finally, let's close with the business analyst and SME perspective. This is where the payment fundamentals become project ready skills. So, as a payment BA, your job is not only to know definition, your job is also to classify the payment, map the flow, ask the right questions, document the rules, identify exceptions, and help testing teams validate the journey. So, in short, you as a BA, you should be able to classify, you should be able to map, you should be able to document and test as well. So important, there are certain important BA artifacts that you should maintain. Those are payment type metrics, rail selection logic, message format decision tree, settlement cutoffs, schedule, process flows, business rules, and exception scenarios. In workshop, maybe as a BA, you should be able to ask questions like: Is the payment single or bulk, domestic or cross border? Which currencies are supported? Is foreign exchange needed? Which compliance checks are mandatory? Which range should be used? What statuses should the customer see? What system post the ledger? Now here is a SME translation skill. So when the customer says, money is stuck, you should think, Is it queued, or is it in sanction review? Is it settlement pending? Is repair required? Was there any timeout, or did downstream posting fail? So this is how this is the crux of the payments that a BA or a product owner or someone who is a SME should think like. Okay, before closing this video, before ending this video, let's quickly recap the key takeaways we have covered in this session. So, messages move information, settlement moves value between banks, customers see debit and credit, banks manage many hidden stages like payment type, rail, geography type, rules and exception. A payment BA must classify map, document and test. Strong fundamentals make MTMX, CVBR plus GPN in basic architecture. So with this, we come to the end of this video. If this video has helped you, please like the video, subscribe to this channel, share it with your friends and colleagues, and comment below which payment topic you want me to explain the next. So keep learning, keep simplifying technology. I will see you in the next video. Bye bye.